From 11FS, this is Fintech Insider News, and I am your host, David Brear, CEO here at 11FS. Thank you for downloading this podcast. If you like what you hear, please recommend it to a friend. This week, we are talking Capital One pursue a $35 billion acquisition of Discover. This is a super interesting space. We really feel like this might actually start to put a bit of pressure on MasterCard and Visa to really make sure that the whole industry is moving forwards. We also saw that OpenPayd and TrueLayer partners to revolutionize instant payments. The open banking space is just going from strength to strength. It really is amazing to see actually all organizations coming together and organizations like this really partnering to move the industry forward. And lastly, Santander reports nationwide TV advert to their mum. No, not to their mum, to the UK's advertising watchdog. This is an interesting one. Is Nationwide having some harmless fun, or is Santander getting a little bit sore on this one? See what people thought, but I just think it's a little bit of harmless fun. We'll get into all of this and much, much more on today's show. Hello and welcome to episode 829 of Fintech Insider. I'm David Brear, CEO here at 11FS, and this week I am joined on Fintech Insider News by two guests who are here to break down the biggest news stories in fintech and financial services. Firstly, I'm delighted to be joined by Niamh Curran, who is the senior reporter over at Finextra. Great to have you on the show, Niamh. I think we sort of name check you guys pretty much every week at this stage in terms of all the cool stuff that you guys are writing about. So what's the favorite thing you've written about this year, I guess?
I don't know if I have a favorite thing I've written about this year. I did just today publish my FinCrime Outlook, which it's hard to say that's a favorite, I think. I cover a lot of financial crime, and it's always a bit of a downer sometimes, but it's obviously a very important topic. Maybe my favorite story of the year so far has been Apple being forced to give up their NFC rights exclusively in Europe. I think it's pretty interesting for Apple users. I'm not one, but I'm sure they're excited to get a little bit of diversity in their payments. And it looks like we might see them make that move in the US as well.
Yeah, well, once they start getting forced to do something, then they start pretending they're doing it freely, don't they, at that point? But yeah, let's see where that one goes. But great to have you guys on the show. We are also welcoming back to Fintech Insider Barry O'Sullivan, who is head of banking and payments infrastructure at OpenPayd. How's it going, Barry? Good to have you back on.
Yeah, thanks very much, David. Yeah, all good, thank you. All good. How are you?
Yeah, pretty good. For anybody who doesn't know, what do you guys do?
OpenPayd is a banking as a service provider. So we're a global provider of embedded finance solutions. We help corporate customers that need to add in financial products into their platform, whether they are, it could be a trading platform, for example, that needs to add on UK GBP accounts and make faster payments and have their customers pay in. Or it could be that we have somebody that needs to pay internationally. So we offer a whole host of different solutions that anyone can embed into their technology.
Very, very cool, and very timely for what's going on in the news this week. So we will come back to you very shortly. On that note, let's jump into the news because there's been a lot of different things. Before I do that, firstly, a quick reminder that just in a couple of weeks we've got After Dark back in London again. So if you want to join us at the Village Underground on Thursday, 21st of March, to watch me and some super duper special guests record an episode of Fintech Insider News live, why would you not want that? You can find all of the details of that and secure your support right now over at 11fs.com/After Dark. That's 11fs.com/After Dark. Alternatively, if you can't get to London, because I don't know, we have a lot of listeners in all sorts of places, don't we, around the world? Then if you are listening to this in the future, you can also sign up to our mailing list and be one of the first to hear about other events that we'll be doing both in London and all around the world, which is good fun as well. Visit 11fs.com/community for a bit more information on that as well. All right. On with the first story then. So this is one that was not picked up in Finextra. I'm sure you wrote about it, Niamh. I'm sure it was fantastic, but we picked this one up on City AM. So this is Capital One announces tie-up with Discover in $35.3 $3 billion deal creating payments giant. According to reports in the US bank and credit card issuer Capital One announces plans to buy rival firm Discover Financial Services in a deal valued $35.3 billion. This would create the sixth largest bank in the US. Under the terms, I mean, it's interesting because the gap between the fifth and the sixth one's pretty gigantic, isn't it, in terms of the US terms there. But under the terms of the proposals, Discover's shareholders will receive a premium of 26.6% on their shares, while Capital One shareholders will own roughly 60% of the combined entity. The deal is expected to generate a 16% return on investment capital by 2027, despite 70 million acceptance points across the US in across more than 200 countries. Discover is still the smallest of the four US payment networks. However, Capital One believes this deal may mean they could compete with the likes of Visa and MasterCard. I mean, this is a really interesting one, isn't it? I mean, it feels like Discover's like the OG of this sort of thing, but they've not really grown in the same way, Niamh. And where do you see this going? Is this a big deal and more than just the gigantic amount of money that we're talking about in this one?
Yeah, I was going to say, I mean, yeah, it is a big deal. It's a lot of money. But yeah, no, I think it is a big deal. Provided it does actually manage to stand up, which we'll come on to, I guess. But, I think this sort of potentially offers a challenge to Visa and MasterCard, or could offer a challenge to Visa and MasterCard, who have such a stranglehold on the market at the moment, depending on how you look at it. I mean, obviously, you have people like Elizabeth Warren coming out and saying, it does the opposite, actually. She thinks it ruins competition. But either way, I think it's an interesting story in payments that they're trying to build themselves up more. I think Discover is from the 80s, one of the sort of original networks. So it's an interesting development, at least.
Yeah. I mean, the Discover card was, like I say, it was like the OG, right? It was the card at the pool that actually, you can't get your money wet. Well, why not use this Discover card? And actually, it's just got carried away from there, isn't it? But what was Elizabeth Warren's sort of point there then, that having less people in the market isn't essentially less competitors, therefore, but, to your point, the sort of dominance of Visa and MasterCard, given their scale, sort of means it's sort of a two-horse race, really, anyway, isn't it?
Yeah, I think I take her point. It does sort of lower the number of players, and maybe form one bigger player. But I think if you're going to make that point, then maybe you should be tackling the hold that Visa and MasterCard do have on the market, because if you're really worried about monopolies, well, Visa owns maybe 40 to 50%. That's a huge cut. Why you would stop this and not tackle that, I don't know.
Yeah. I think Americans have a quite different view on these types of things, don't they? They sort of have the American market is very much like the market decides, which I always sort of think it sort of has a tendency to where the biggest sort of work well, and that doesn't really leave room for small startups. I think that's definitely been sort of seen in the fintech scene out there as well, in terms of really where do people get to. It's why people like Apple, people like Google are probably the biggest threat to the big US banks out there. But Barry, what do you think about this one? Is it a significant step, do you think, in terms of the shake-up in the market?
Look, I think bigger picture is that we've seen a lot of innovation in the last few years in digital payments, like open banking, for example. So I don't think it's any surprise that card payments ecosystems are seeing more consolidation. I think Niamh's absolutely right. There are other players in the market that have a bigger monopoly or bigger share. So competition's a healthy thing, whether it's a join up with partners or others. I always think there's room in the market for startups, regardless. Obviously, if it wasn't the case, I don't think we wouldn't have any startups. It would just be the big players that exist, and that's it. So I think there'll always be innovation. There'll always be new people in the market or consolidation. I don't think it's necessarily a bad thing.
Yeah. And it's interesting, almost having another leg to that competition essentially will put the pressure on Visa and MasterCard to, keep innovating as an opportunity. We actually ran a quick poll to get the opinions of the listeners on this one, to see whether they thought the regulators would actually approve this deal. 61% of people said yes, 39% of people said no. I mean, it'd be fascinating to see whether it goes through. I mean, Niamh, you sort of mentioned there's been a bit of a kind of a crackdown in the US in terms of these types of mergers and structures. I know was it Plaid that wasn't able to do the thing they were doing with Visa? Am I saying that right, or is that wrong? That is right, isn't it? Yeah. And I think that was down to really the structure that would kind of come off the back of it. So, do you think it will go through, or do you think the sort of administration from a governmental perspective will stick their oar in at some point as well?
I have a feeling that given Biden's whip cracking on antitrust laws, and I don't know how many he's done, and there's less in the payments. I think I saw something about two concrete firms trying to merge. Um, I have a feeling that they might stop it. Um, it's such a big cut that's such a big company they could make, um, that I can see them potentially stopping it. But I mean, I'm not sticking to that. If I'm wrong, I'm wrong.
That's the best edging of bets I've ever heard. But yeah, you could see it from both sides, can't you? But I personally, I mean, I hope this one does go through because, like I say, I think a bit of pressure on, at least in that market, Visa and MasterCard to continually innovate and create a competition for the businesses that they support. That's got to be a good thing for the market more broadly, hasn't it? And actually, it's easy to ignore, little old organizations, but actually when they start ganging up on you, then you've really got to sort of listen to it. But all right, well, I think we could probably talk about that one for several more hours, but I think almost let's wait and see. And if it happens, let's see what the impact of it is, eh? All right. Next up, we picked up a story on Fintech Global. This is OpenPayd and TrueLayer forged strategic partnership to revolutionize instant payments. The new partnership means OpenPayd can leverage TrueLayer's extensive payments network to enable secure instant account-to-account payments. This is, according to reports, will streamline the fund deposit process in real time, significantly improving conversion rates and enhancing the overall customer experience. OpenPayd offer bespoke payment solutions tailored to the needs of businesses worldwide through their banking as a service platform. If only we had somebody to talk about this one. Barry, tell us a little bit more about this. I mean, it's an interesting step, and you sort of sometimes see these announcements in partnerships, and you sort of think about, well, at what layer does this part? Is it just sort of you're going to hold hands and be nice with each other in public, or like is there a more deep there? So tell us a little bit more about what this means for your product and actually what the services to the customers will be.
Yeah, sure. I mean, look, open banking is still in its infancy, but it's growing rapidly. I think if we look at the number of payment initiations that took place in January last year against this year, it's almost doubled. It was around 8 million, and now it's about 14 or something million this month. And we are seeing an increasing number of our customers that are requesting to have an open banking solution for payment initiation. OpenPayd's goal really is to be rail agnostic and provide as many different solutions as possible to customers. So whether it's traditional faster payments or SEPA or cross-border, it's giving customers the choice to choose how they process. Open banking is in addition to that, and it sits on the existing rails we have already for faster payments. But that seamless process then will be that if we have, say, a trading platform, for example, the end user can request or be pushed to the payment initiation service, and a seamless process then of sending funds via faster payments to then go on and do something that they need to through the trading platform, as an example. It just helps to keep the whole end-to-end process quite sticky. So picking a partner for us, it is a very good strategic move. We could either spend a lot of time and money building, getting regulated for that aspect than building the whole tech ourselves, but it's best to partner with an expert, and TrueLayer is the best brand in the UK for that. So for us, it's very much a strategic relationship.
Yeah, it's interesting, isn't it? The mantra of every IT department everywhere is like, yeah, we could build that, but actually it shows a lot of emotional intelligence to be like, no, like we're brilliant at this thing, they're brilliant at this thing, like together we can do something sort of impactful. So, I mean, that must have kind of required a little bit of trust from both of you, right? Because you're sort of opening up the kimono a little bit there to sort of work together at more than just a surface level.
Yeah, exactly that. I think, look, for these types of partnerships, as you said there, you either try and do it yourself or you work with an expert. We have a very clear focus on our core proposition, which is our banking, to provide domestic payments globally for organizations. When we look at things like the payment initiation, or it might be issuing or something. That's not an area of focus for us. So it's much better for us to partner with someone that is their area of focus. And then you have a very well-rounded offering that may not be yours completely, but it works.
Yeah. In terms of, I guess, the numbers that you mentioned, I mean, open banking, it does seem like actually the numbers are ticking up, doesn't it? And it's not in a sense that people are demanding open banking necessarily, but actually the convenience that those experiences are creating are really what people are craving, aren't they? The people only know what a good experience like when the bar is reset. So do you think that's what sort of the early adopters are essentially setting a new bar for customer experience, and therefore everybody's having to sort of fall in line with that?
Yeah, it's a good question. Do you know, I think this whole open banking piece will be led by the merchant and not the end user, because it is something that needs to be learnt. For example, I mean, I had to pay a while back through an open banking. It came through, opened up my banking app, and I just decided not to do it because it went into my banking app. But then obviously learning more about it being in the industry, whenever I see the ability to pay by open banking, I do it straight away. It takes me to my bank app. It gives me the beneficiary details. It lets me then process the payment, and I can just get on with my day. So there is that education piece. I think that it's a secure way of getting to a transaction.
Well, it's interesting that, isn't it? Particularly we've seen in testing, particularly places where face recognition on phone devices, the pop-up to open up your app, then you're authenticated without you even really having to do anything or think anything. You're just literally staring at your phone. So
yeah.
But actually, as you say that, it almost goes, it's getting those friction points right, isn't it?
Exactly that. Yeah. It's making it so that it's invisible to the person doing it, because that payment event is not the event they want. It's the bit. So there's something else around it. They're either buying a product or they're looking at a service.
Yeah, it's interesting. Niamh, what do you think? I mean, every so often we get open banking doesn't work and nobody cares, blah, blah, blah. Everybody gets all uppity about it every 6 months or so, don't they? But the data doesn't lie, right? The trend is people are using this more and more and more. And actually the people who are out there building cool things to make it more useful as well are kind of definitely increasing in the market. So what do you think?
Yeah, I mean, look, it's very exciting. I think open banking was one of the first topics I started writing in Finextra 2.5 years ago. It was probably the first topic I came across that I went, what's that? And now I know way too much about it. More than I think most people realize is going on behind the scenes. But it's grown and grown more in reality. Just before I joined you today, I was talking to someone about pension dashboards, and they rely in the background a lot on open banking being developed more and more. And they're quite an essential thing in, moving forward in people's finances. So this move towards more open data, I think, is can be a bit scary, but also it's something that ultimately is going to be quite useful for people, and hopefully they won't actually see it happening that much. I mean, that's ideal.
It is fascinating, isn't it? I mean, as much as we sort of said the sort of payments capability sets the standard for other payments companies, then what's happening in payments sets the standard for lots of other slices of the industry, doesn't it? If you go and talk to, Charlotte Croswell or, the guys at CFIT, I mean, the product roadmap is long, in terms of all of the things that actually could be opened up through this. So, and as you say, things like the pension dashboard, or, if you look around the world, how people have taken different sort of leadership positions with opening up data more broadly. I mean, it's all for creating a better customer experience of one form or another, or, a little bit less friction, or greater competition, or easier comparison. Like it's kind of putting the customer in charge, which ultimately is definitely a good thing, isn't it, in that market? It makes you wonder where this sort of gets us to a certain degree. Crystal ball of where open banking can get us. Probably the banking bit gets dropped, doesn't it? In terms of, you're talking about pensions and insurance and, on and on and on. But I wonder at what point we get to the same, almost I feel like I own my mobile phone number now, and, I'm just parking it at EE or wherever. I kind of feel like your data might be centrally something that's yours, and, you're giving people access it to do risk-based pricing or structuring or anything, and you have the ability to revoke it at any point. I know if Dave Birch was here, he'd be banging on about identity at this stage for at least 20 minutes, but I feel like all of those things kind of come into that. Well, this is the direction of travel, isn't it? But it takes a lot of regulation and a lot of, sort of coercing of different sort of bodies to make that happen. But that feels like a good world to live in to me. What do you think, Niamh?
Yeah, I mean, I think it's going in a really exciting direction. I think, sort of some idealists would say something like the pensions dashboard, they would see that as being all your finances on one dashboard, centralized, like you say, maybe on your phone or something like that. And, maybe that's the kind of end goal we'll see. Hard to say at what point we'll get there, if we'll get there, if that's exactly what people are looking for. But I just think it's ultimately comes down to giving people the best deal and the best possibilities for their own finances. And the way to do that is obviously them having their data and having ownership and control over their data in this way.
Yeah, I agree. Barry, what do you think? I mean, your roadmap looks to be long with regards to all of the possibilities of even what is happening with open banking now, but the stuff out in the future, must get your product team pretty excited.
Yeah, look, there's the here and now, right? And then there's the future part. So the networks we're building today, if you look back 5 years ago or so, some of the stuff we're looking at now didn't exist. So for us, the exciting bit is we can build out the banking network. We can go direct to schemes. We can look at cards. We can look at open banking. We can look at blockchain. In 5 years' time, there's probably going to be new technology, or I guarantee there'll be new technology that just changes the landscape again. And there'll be something new and exciting we can add in. So it's just making sure that we're on top of that and we're a front runner at all times, rather than letting other people develop it and then we follow behind.
Are you going to do a TransferWise on us 5 years from now and drop the paid bit and just be open? Because it's like everything. It's just not payments. It's foreshadowing that. If that happens 4 years from now, like you heard it here first, all right?
Yeah, sure.
I have to say, as a journalist, being called open is not great SEO.
Yeah, that's true. That is true. Yeah, I didn't think that one through, did I? Yeah. You'd think the guy who named a company with 2 1s at the beginning of it would have a better view of search engine optimization when you're at that point. But all right, on that note, while I go and read the SEO book, we're going to take a little bit of a quick break. Back with you shortly. Welcome back, folks. Before we get back into the second half of the show, a note to go and check out the most recent Fintech Insights show, which I'll be honest, I'm a bit disappointed I wasn't on this one because it sounds like a laugh. In this episode, a cohort of my fellow Fintech Insider hosts, Kate Moody, Rachel Pandian, and David Barton Grimley, attempted to ask the most Googled questions about fintech, which I imagine there was some silly ones as well. Apparently, there are other search engines available as well if you want to use one of them. From simply what is fintech to how do I nail a fintech interview, we help you navigate the most frequently asked questions that you might not want to ask out loud. We have you covered and we'll try to get all the answers that you need. So go check out that podcast in the feed. It's just the one below this one. All right, let's get back on with the show. All right, so this was an interesting one where I was sort of like, yeah, duh, but like Rothschild expands to Saudi Arabia with Riyadh offices. Rothschild's, the international private and merchant bank, is strengthening its presence in the Middle East with the opening of its Riyadh office. The move, in their own words, enhances their businesses by offering their growing client base greater local proximity for strategic advice. Head of Middle East at Rothschild & Co. calls it a significant milestone in our ongoing efforts to expand our regional footprint in key and critical markets. Saudi Arabia represents a fundamental pillar of our Middle East strategy. The reason I was sort of like, yeah, duh, it's like Rothschild does like, hey, like lots of money stuff. And where is there lots of money? You know, like Saudi Arabia right now, right? I have to say, and I was out in Saudi Arabia and it starts sounding like an advert for Saudi Arabia, but Saudi Arabia feels like fintech in 2014 in London. Like that's what it feels like. It feels like the regulator, opportunistic fintechs, big banks being a little bit nervous about the world that's sort of coming. It really feels like there's such a massive amount of change going to happen in the region to bring about a different way of doing financial services out there. It also feels, if I'm honest with you, like there is just we always sort of talk about the sort of overcharged, the underserved, the overwhelmed. There is like massive customer problems to kind of solve out there. There are huge demographics that have been largely completely ignored. So it feels like an amazing opportunity. So, I mean, Niamh, does this just sort of go like, yeah, there's lots of people with money, so they went to where people with money are? Or do you think there's a little bit more sort of strategic nature of this one?
I mean, to be honest, when I saw this, a very similar response to you was sort of like, oh, I would have felt they already had something out there. But I mean, I don't know too much about Rothschild and their sort of targets, but I would say it seems much more likely that there's a lot of money out there. Why wouldn't they be there already?
Yeah, I can't imagine Rothschild's going to suddenly have some like mass market retail offering. Do you know what I mean? It's definitely aimed at certain types of people, one of which I am not. But Barry, it feels quite interesting in the payment space out there. Like one thing that was sort of definitely getting a lot of attention when I was there was basically all the underlying payments infrastructure. That's super interesting, I imagine, from your perspective, because you've sort of seen that movie before happen out here, right?
Yeah. I think that following a bank to a market is probably something that we wouldn't do. That what we typically do in our growth, where we're looking at the more domestic fields, we're looking to work with domestic banks that we can give our clients with an international presence, a more domestic feel, is that it's typically client-led and led through the demand of where they're looking to grow. So, things like LATAM and Asia Pac are quite a key key markets for us to be developing banking relationships within country. That Middle East area is an area for us of growth, of course, and finding the right spot or the right area within that Middle Eastern region, it would be key for us if we were looking at a hub. I can't comment obviously for Rothschild and the reasons why they went there, but you're absolutely right, both of you. They're very affluent areas. They're large family offices with extreme amount of wealth and capital. So you can see why. And as Niamh said, I'm surprised they weren't there. I would have thought that they would have been there already.
Yeah, it does seem like they're slightly late to the party, doesn't there? Which makes me think there was some sort of regulatory thing, or I mean, it's not as easy as just sort of pack your bags and head over there. You've got to be sort of approved in the structure and everything that goes with it. And part of that is often the ownership structure of the organization that's actually being deployed there as well. So it does have extra complications that you wouldn't sort of typically expect. But yeah, we'll wait and see what happens with this. I mean, they're joining a lot of other very large banks out there, but actually if you're aiming at ultra high net worth, then that Rothschild brand kind of carries some weight, doesn't it? So again, I think I'll stick to my Monzo card. All right, this is one that we picked up on Finextra. Well, there we go. So this is Detected collaborates with Visa to offer improved SME onboarding in the US and over in Canada. So Detected is a cloud-based platform that provides a modular onboarding flow builder, access to its intelligent data engine, and case management tool for ongoing administration. They claim that meeting the commercial imperative to onboard fast, but without a compromise to any of the risks. They're saying that this is essentially the new battleground in terms of shortening the times for those things and tightening up any loopholes. Their partnership with Visa will, for the first time, bring this type of onboarding platform to the US and Canada for all Visa's small business customers. The aim is to empower SMEs in North America with fast, efficient, and intelligent onboarding processes. We actually managed to speak to Liam Chanels, founder and CEO of Detected, who told us about this. Let's hear from him now.
Obviously, great news for a company of our age to partner with a business like Visa. The partnership's essentially to allow Visa SMB customers to offer Detected's technology to streamline their onboarding processes. And there are a whole host of use cases from regional banks to credit providers in the US who have a really poor business onboarding experience. Lots of manual workflows, especially in the back end, but also the front end experience is, let's just say, dated in a lot of instances. It's asking for documents, it's asking for extensive forms to be filled out. Whereas with Detected, the user just lands on the Detected flow, albeit white labeled, enters the name of their company, the city that company is registered in, and then Detected goes off and does the rest. With auto approvals included within that. So it's just a case of streamlining merchant onboarding. So, yep, very happy. Obviously, the work starts now, as with any partnership, but we're working really closely with the team over in the US and Canada. So looking forward to seeing how it unfolds.
Very, very cool. I mean, I think he was being sort of slightly understated. Like most of the onboarding for merchants, not just in the US or Canada, is like shockingly bad, like absolutely shockingly bad. So, and actually, if you start a relationship and experience in that form, it doesn't really set the greatest of expectations for how those things go. But I mean, is this? I know whenever we talk to the guys at the 11FS Pulse team, that basically onboarding is what everybody's always most paranoid about for anything. Whether it's a retail account or merchants, but. Do you think this sort of spells almost similar to what we were talking about earlier on, Barry, with regards to payments, that actually one industry is setting a much, much higher bar, and therefore even merchant onboarding now needs to have a very slick user experience to really capture people's attention. Again, because there's competitors. Like, you deliver a crappy experience, people have got options now, right?
Yeah, couldn't agree more. Both from look, we only service corporate entities at OpenPayd, so it's vitally important that we have a process that we can onboard seamlessly. I can't comment on here for the retail part, but having worked in the industry for 20 years and also worked for organizations that deal a lot heavy retail flow, it's vital to make sure that somebody can onboard as fast as possible and then go and do something else. Not just, I guess, that you're concerned about losing customers, but also from the other side is that how can you scale a business if it's so clunky for you to onboard? Because then you'll have a bottleneck and a backlog of customers, but you can't onboard in time to make the revenue. So there's both sides, I think, that it can impact.
Yeah, and it's amazing how many of those processes require several thousand pieces of paper as well. So that the risk that gets built into those processes is not great. It's a funny one, Niamh, isn't it? I mean, it's often, we're all consumers. I know we're all sort of a bit geeky and we sort of love financial services to one form or another. But actually, when people sort of start leaving themselves at the door of their organizations, it's like we all use great experiences. You know what I mean? Like, actually, we all use Apple's products and Airbnb and Deliveroo and what, Uber makes it so easy, blah, blah, blah. But then people sort of get to work and forget all of that UX stuff and just deliver a terrible experience to people. It's, but do you think the non-financial services players are increasingly setting the bar for financial services?
Yeah, absolutely. I think people get used to a certain way of being able to do things quite easily when they are maybe booking, I don't know, something like Airbnb. And looking at it's quite a seamless process a lot of the times from our external outside financial services processes. So if you're coming into something where it's, I don't know, very labor intensive, clunky, slow, it's a bit like, I don't know, a bad first date or something. It makes you want to leave quite quickly.
Have you ever done that? Because I've never. I mean, I got together with my now wife very young. It's like not very young, like not really young. I mean, like 19. So, I've never had that bad date experience where I was like out of the window.
Yeah, I think I've left after one drink. Definitely.
Have you? Wow. Did you let them know you were leaving, or did you just go?
No, I let them know. I'm not horrible.
Didn't ghost them.
That wasn't what I was saying. I was just saying that they might have been terrible.
I would think it's a very nasty thing to do.
Well, I feel like we got diverted ever so slightly there, didn't we? But there is one story we didn't have time to cover in detail that I will cover quickly before we move on, because it is a big deal and it's a lot of money. But this was one that was picked up over at City AM. This is Challenger Monzo to cement $4 billion valuation in new funding round. I don't typically like just covering hey, some people have got a lot more money stuff. But actually, this is a really interesting one because there's been a lot of speculation around actually where Monzo are going to get the next round for. And actually, given they're doing 1,000 different things, actually, what is it that they're going to be moving into next? They've been making some really interesting hires lately in the insurance space, the pension space, and all of this kind of points to, they're doing just a huge amount to actually cement their place in the UK market. So Monzo is expected to finalise a deal for 350 million of fresh funding by the time you actually listen to this podcast. This takes their valuation up to over £4 billion. There have been lots of reports earlier on, as I mentioned, that Alphabet, so this is the company that actually owns Google and a bunch of other stuff, we're exploring 500 million of investment into Monzo. that nothing has yet has materialized around those sides of things. Monzo have just announced that they've reached 9 million customers after onboarding 2 million customers last year alone. This is really sort of solidifying their position as one of the UK's leading challenger banks. I think it's really interesting that it's so almost the maturity now where we're getting to. You know, when we're starting to get to a point where you've got 9 million customers in a little old island like the UK, then, you know, fintech's come a long way, hasn't it? Really has. It's pretty impressive. And finally, it is time for, I always like leave them with a bit of a funny one, which is quite entertaining. And I'll be honest, I was off for a couple of days last week and I saw this sort of unfold on Twitter, and it was rather entertaining. Squabbling of two organizations amongst each other, but Nationwide's Dominic West advert reported by Santander to the watchdog. Feels like somebody just running and telling their mum, doesn't it, at this stage, which is weird. But Nationwide's promoted their recent rebrand with a TV advert in which British actor Dominic West plays a stereotypical big bank boss, sniggering at Nationwide's branches from across the street. It seems Santander has taken issue with this ad and reported it to the advertising watchdog. According to the BBC's report, the Advertising Standards Authority said it was investigating a complaint which argued that the ad was misleading and discredited Nationwide's rivals. The advert comes at a time when Nationwide renewed their pledge to keep branches on the high street amidst widespread branch enclosures from many of other big banks. I mean, it's an interesting one, isn't it? I sort of saw that advert and thought, that's that guy from The Wire, isn't it? I never knew actually what his name was, which is bizarre in its first sense. But I felt like they were kind of, I like the idea of the advert, but I feel like the execution was not quite right. You know, like there was something almost, I think you can tear down like parodies of the industry, but actually I think when you start to isolate individuals within them, it becomes a bit personal, doesn't it? You know, so what do you think, Niamh? Is it a little bit of fun and, you know, Nationwide trying to rebrand themselves and position building societies as, you know, the answer to the trust problem in financial services? Or, you know, do you think it was just a bit too far?
Oh, I don't want to say it was a bit too far. I mean, I think it was a very I actually haven't seen The Wire. I'm sorry to say, but I have to admit, every time I see Dominic West play a character, it's always someone quite slimy and unpleasant. And I don't think this was any different. You know, you have him sort of pretending to rack up a large lunch bill and complaining about people, mocking people for losing their savings. It's a pretty nasty portrait of bankers, but it is one that I think a lot of people already have in their heads, unfortunately. But, you know, having said that, I think it's a bit of a losing game to stick keeping branches open as the way to manage trust amongst your population. You know, I think the reality is we should keep a lot of branches open, but we are going to have to, you're going to have to start closing some branches eventually.
Yeah, I mean, if people are not using them, that's the thing, isn't it?
Yeah.
You know, it's almost we provide services because they're useful to people. If they're not useful, like what's, you know, so it is a difficult one, and almost the setting themselves up to the minute they start closing any branches, this is going to come back to them, isn't it? So it just feels a little bit short-sighted, regardless of whatever the reasons on of it are. But it feels, again, it feels like an odd ditch to die in, doesn't it? You know, I mean, Nationwide have done some amazing things recently, giving away millions and millions of pounds in terms of, I would have majored on that one from my perspective, in terms of like the bank that distributes its profit amongst its customers. That gets me as a customer, not the, you know, dissing all the other banks. But what do you think, Barry? Is it a little bit of like light-hearted sort of ribbing, or is it just a little bit too far?
Look, personally, this is a personal opinion. I don't see any harm in it. It hasn't made me think any different of any of the other banks. It wouldn't make me change from my bank to Nationwide, because I'm probably not their demographic. I'm not that. I haven't been to a branch for so long now that actually that's not a big selling point for me. So I'd guess who's the target audience they're looking to go with, because I don't know whether a younger demographic maybe not that interested in whether there's a branch there or not. But I don't know. Personally, it's just an advert.
who watches adverts these days anyway? Like that's probably the other thing to kind of major on these ones, isn't it? So, do you know, I'd sort of say I don't mind brands having a bit of a cheeky, chappy pokiness. Like, in fact, you know, our brand is sort of built on basically just being able to say whatever you like, so long as you do it with a smile on your face, basically. So, I actually do think that's a good thing because, but there's something sort of slightly inauthentic about it, which is the bit that sort of rubs me slightly the wrong way. But I don't know if you've heard, but they've got a radio advert that I actually think sticks the landing a little bit better on the sort of cheeky poke at the industry piece without paying a Hollywood star probably millions of pounds to come in and do it as well. But yeah, I mean, people trying to shake up the industry, I'm all for that in that sense. But I'd love to know what you guys think, the listeners to this, whether you thought the nationwide advert was a good attempt at some lighthearted changing, or whether it really did create a point of differentiation for them against the rest of the industry in that way. But let us know. Feel free to write in. All right, that unfortunately does wrap up this week's Fintech Insider news. Thank you so much for the guests for joining us. Where can they learn a little bit more about you and all the good stuff that you do? Niamh, starting with you.
Yeah, like everyone says, you can find me on LinkedIn, Niamh Curran, just spell it right. And you can find me on X as well as Journo Niamh. Don't have a huge following on there, but you know, would love to have a reason to post there more often.
Sounds good. I've pretty much abandoned Twitter at this stage. Like, I just find it's just sad now. Do you know what I mean? It's like going to a childhood home. Do you know what I mean? It's just not the same anymore. You know, it's just like, that's weird. Barry, where can people learn a little bit more about you guys and all this good stuff that you're doing?
Yeah, so look, from OpenPayd, obviously website is openpayd.com. For me, same as Niamh, LinkedIn. Best place to get me. I will be at most or all of the Money 2020s. So if people want to meet there, more than happy to do so. So yeah, lots of ways to go.
You're doing all of the Money 2020s. Jesus, that's like
this year.
I did joke that they've just been doing them in places where hangover movies plausibly could have taken place. So you're literally doing a world tour, which is quite impressive. But enjoy that then. Hopefully you don't wake up on the top of a building. Eh? As for me, do you know, I say this every couple of weeks, but like, send me an email. Like, I do get some funny ones. David@11fs.com. It's always interesting to hear what you thought of the show. And I mean, anything else as well. Some of the random stuff I do get emailed to me is quite entertaining. But yeah, thank God for filters. And thank you all for listening. If you want to join in the conversation, find us on pretty much any social media channel at this stage. Or if you want to, email at podcasts@11fs.com. Thank you very much for listening, everybody. Hope you had fun. Goodbye.